Good morning. It's Jeffrey Christian. It's about 10:40 in the morning here in New York on Tuesday, the 28th of October. I want to talk about the markets. We've seen a tremendous amount of volatility over the last couple of weeks, and talk about the momentum traders who came into the market as buyers and then exited the market. Well, the major factors really over the course of October. At the end of after that, I'll talk a little bit about the dollar and some social and political issues that I've noticed in the last week or so. Gold is trading around $3,955 half an hour ago when we were producing this. That was off $64 from the day before. It had dropped as low as $3,901 earlier this morning. And in fact, all of the four precious metals that I'll talk about today had fallen very sharply overnight into morning trading, and have sprung back some once the New York markets opened up. There are a variety of factors that have been contributing to the volatility across all of these markets. And the things I'll say about gold are true to a large extent for silver, platinum, and palladium over the last month or so. We saw gold start to rise early in the year. It moved sideways really from late April into late August. After the Kansas City Fed's Wyoming symposium, the price of gold started rising. There were speeches and other analyses at that time talking about the likelihood of more interest rate reductions over the course of the remainder of this year and through 2026, due to the fact that the economic environment was showing signs of weakness and was moving toward contractionary, recessionary conditions, or at least extremely low growth and rising unemployment and reductions in employment while inflation remained high. We saw the price start to rise in September, and it got up to around 3,400 or so, 3,800 at the beginning of October. At that point, we saw a lot of short-term investors, speculators, if you want to call them that, momentum traders, opportunistic traders. These were not people who were long-term gold buyers and holders. They weren't interested in holding physical gold. They saw the prices of gold, silver, platinum, palladium, copper, aluminum, stocks, bonds rising, and they poured in. And that took the gold price sharply higher over the course of October. And it started to rise from around 3,500. And then a couple of weeks ago, it broke above 3,800 and made a run to 4,400, just shy of 4,400. It got down to up to 4,390 some odd dollars. Since that time, it's come off. And as I said this morning, it was testing 3,900. Our trade recommendation for gold has been to stand aside since last Thursday. We had been saying buy, but with the volatility that we saw coming in on the downside as well as the upside, last Thursday we issued a trade recommendation that said, over the next few days, given the uncertainties and the technical price chart patterns, price of gold could go to $3,800 or it could go back to $4,400. And in that kind of environment, short-term and ultra short-term investors or speculators or momentum traders should probably stand aside. Clearly, the momentum traders didn't stand aside. They continued to unwind their long positions and maybe establish short positions. With the government lockdown, we're not getting commitments of traders, so we don't really have that kind of data. And I haven't bothered to look at the COMEX data to discern what's really going on there. I apologize for my negligence. A lot of it's technically oriented. There's some political and economic developments that are factored in there. There are some fundamental factors that are in there. The fundamentals are relatively unimportant at this point, at least over the last month. We've seen a lot of technical trading. We've seen people concerned about the political and economic environment. The U.S. government has been in lockdown. and shuttered since October 1st. That has decreased the flow of statistics. So financial markets are flying in relatively foggy weather. They have less data to look at to see where we're really going over the course of the third quarter and into the fourth quarter. There are concerns about persistent inflation, inflationary pressures, weakening economic activity, layoffs, not only in the government and institutions and universities and corporations that take government money either for research and development or for actual production, but also in companies that don't necessarily take money from the U.S. government. We're seeing a weakening economic environment, but we don't have good data on it. That has increased uncertainty and anxiety among the financial market participants, which has been reflected in both higher precious metals prices and more volatile prices. It's going to be there. The Fed is meeting today and tomorrow. Tomorrow, the great expectation is that it will reduce interest rates and make comments about the likelihood of further interest rate cuts due to the economic weakness, but being somewhat cautious because of the persistence of inflationary pressures. That's sort of baked into the prices already. It's long-term bullish for gold and silver because it's long-term negative for the U.S. economy. Meanwhile, the lockdown continues. There are two people who can call the Congress, the House of Representatives, back into session and cause them to negotiate with Democrats to end the lockdown. That's the President of the United States and the Speaker of the House of Representatives. Neither of them have said they want to do that. In fact, they've said they don't want to do that. They are very happy to continue with the lockdown because it opens the risks for the president and the administration to do things that the Congress is not around to argue about. Not that the Congress has any teeth left in it. But you've got this political environment that is quite problematic. The war in Ukraine has also deteriorated. The Russians have targeted civilian targets much more and much more fiercely, trying to gain grounds. The Ukrainian military, meanwhile, has actually had some success at the battlefield and the fronts against Russians. And there are reports of pretty heavy Russian losses in periods of time where the field commanders are pulling back from the front because of the withering Ukrainian fire. There are trade talks going on, and there could be some possible disappointments. If you look at what was said in the weekend, the U.S. government said, well, Secretary Bessent has gone and talked to his Chinese counterpart, and they have an agreement. If you looked at the agreement, it was they agreed that they should have trade negotiations. And President Trump and President Xi can talk about these things Thursday when they meet in Asia. So it's an agreement to agree, which my lawyers tell me doesn't stand up in a court of law. Yeah, we should probably have an agreement. That's an agreement. That's the agreement they have right now. We have to see what happens on Thursday. It is quite possible that there could be some disappointments for anybody who thinks that there'll be a grand trade agreement covering everything from agricultural imports from the United States into China to rare earths and other exports from China into the United States. There is a lot of anxiety and a lot of uncertainty circulating in the financial markets. That's probably going to keep gold and silver, platinum, and palladium prices high. And it's probably also going to continue to keep them in volatile fashion. So again, we had said on Thursday, and we actually reiterated in a trade recommendation on Monday, the range could be 3,800 to 4,400 over the next week. We'll see where we are on Friday. That's the outlook for gold. Silver prices have also come off sharply. They touched as low as $45.50 earlier today. They're trading around $47, so they sprung back as gold and platinum and palladium and copper. There's still a lot of downside potential to it. If you look at the price chart, you can see, the price support, $42 perhaps, perhaps even lower. It could go as low as $38. There has been specific tightness in the Indian physical silver market and in the perception of low inventories in London. There have been imports into London from the United States and other countries to shore up those inventories, but we haven't seen the latest inventories from London for the end of September, let alone October. We won't see that October data for several more weeks. So silver is reacting to the same political, economic, and technical factors that gold's reacting to. Our expectation is that it will remain volatile. There is greater downside perhaps on silver because of the unwinding of some of the arbitrage trading and speculative buying that had been based on the view that London was running out of silver. Silver inventories in London are low, but it's not particularly problematic to the function of the London interbank market that the inventories are relatively low, despite what hand-wringers would have you say. Platinum prices also have been coming off. They got down to $1,501 earlier this morning. They've sprung back to $1,580. Our view has been and continues to be that the price of platinum probably will decompress further, if not in the period now, after early January into the first quarter of next year. While there's some seasonal strength to platinum prices in the first quarter, next year might see prices come off once we get into the middle of January. And palladium prices also have come off. They got as low as $1,356 earlier this morning. They're around $1,413 a half hour ago when we were putting this all together. Similar pattern as with gold, silver, and platinum. The dollar, meanwhile, is holding steady, and it may even be up a little bit. This is the Fed's trade-weighted dollar index, which is what we primarily use, although we also look at individual cross rates and the other indices that are there. This weekend, I went to the Poster House, which is a private museum here in New York. They have an exhibition on fascist posters. And, one of the great things about a democracy and a democracy like the internet is anybody can say anything. They don't need to know anything about what they're talking about. They can criticize other people. I certainly get my share of ill-informed criticism. And I've said before that if you understood fascism, it's really corporatism. It's the state exists for the benefit of corporations, and corporations exist for the benefit of the state, and the people are subordinate to the corporations. And I've taken criticism from people who never read anything about Mussolini or fascism, much less the books that he had published written by ghostwriters while he was Il Duce. But that's actually a quote from Mussolini. And at the beginning of the Poster House's exhibition, they had posters from Fiat and from Perugina Chocolates. And you can't probably see it here, but a lot of the corporate posters had fascist symbols, the fasci, the sharp axe, and other symbols in there. But at the beginning, above two of the first three posters, they had Benito Mussolini's quote, "Fascism should more appropriately be called corporatism because it is a merger of the state and corporate power." You don't have to take my word for it. It comes from the horse's mouth. Speaking of horse's mouths, another thing is, here's the link where you can download the Project 2025 document. It's only 920 pages long. It was produced and distributed by the Heritage Foundation. So you can read the source material. Yeah. And I wanted to point out a couple things, John. Some people should be ridiculed, and some people's views should be demeaned. Some people speak from a position of ignorance or delusion, and it's okay to talk about them and say, that person is deluded, that person doesn't know what he's talking about. It's also okay to call Trump a fascist. He's called himself a fascist and has been very proud of his fascist tendencies. It's not... In 1980, when I went to J. Aaron, Soviet troops had invaded Afghanistan. J. Aaron was a major trader with the Soviet Union, buying platinum group metals as well as gold from them. It also traded with the People's Bank of China, the Bank of China, and other entities in the communist world. But it was 1980. And there was this desire, and they asked me, they said, can we call these countries something other than communists? We don't want to offend them. And I said, well, we can call them centrally planned economies, which is what we did, because that made sense. And we were not talking politics, we were talking economics, we were talking gold and silver and platinum group metals, fundamental supply and demand. And that's a centrally planned economy. That's an economic factor. So we can call them centrally planned economies, but you have to understand, the Soviet leadership, the People's Republic of China leadership, they didn't see it as being something bad to say, calling them communists. They were proud to be communists, same as some people are proud to be fascists. It's okay to call them fascists if that's what they want to say that they are. If they aren't aware that what they're promoting is fascism, that's a whole nother story. Just a little bit of point to order, a little bit of social courtesy. That's all I have for now. You can go to our website, you can buy our yearbooks, you can subscribe to our Precious Metals Advisory Monthly, you can sign up as a retail investor client of ours and get a variety of shorter term and longer term things. The yearbooks are included with the retail investor program package that we have, as are excerpts and price projections and information from our trading recommendations for gold, silver, platinum, palladium, as well as excerpts and information from the Precious Metals Advisory. Yesterday, we did a market alert, which goes out. Market commentaries we distribute more broadly. Market alerts we distribute to our clients and friends of CPM Group. We did a market alert yesterday, which covered some of the same ground that I covered here, but in much greater detail. And retail investor package clients get those things like market alerts and market commentaries, as well as the yearbooks and a variety of other pieces of information. Take care of yourself. Take care of those around you. Try to do something good for the world. Gear up for Halloween. It's a great holiday. And we'll talk to you on Friday.